Hello there. Welcome to Trading Day. Let's get to the stories we're bringing you from our newsroom. Shares in Canadian packaging and printing company Transcontinental jumping 20%. That's after it agreed to sell its packaging business to US-based Pro Ampac Holdings. The deal has an enterprise value of $2.1 billion, including debt. Transcontinental says the move will allow it to focus on transformation of its retail services and printing and publishing segments. Now, Transcontinental is selling off a huge chunk of its business here and plans to pay a $20 dividend. Montreal is hosting G7 ministers to talk about artificial intelligence, quantum computing, and a range of digital issues. It's a two-day event, part of a series of ministerial meetings with AI Minister Evan Solomon and Industry Minister Melanie Joly. The gathering will have both an industrial policy agenda and it will look into tech policy issues. In June, a joint statement on AI said the G7 nations will work together to accelerate adoption of AI in the public sector to enhance the quality of services. We're watching shares in IBM. The tech company has agreed to buy a data infrastructure company called Confluent in a deal valued at $11 billion US. IBM is trying to capitalize on the demand boom for AI computing. And some analysts believe the acquisition could significantly improve its AI portfolio and subsequently its software unit sales growth. And there is a look at the TSX under a little bit of pressure today. Could be worse, but you can see we're still up almost 22%, excluding dividends, in the past 12 months. And let's check in on the U.S. markets, slightly down today, even though we're likely, the market thinks, to get another interest rate cut on Wednesday. Air Transit is starting to wind down operations with a full cancellation of flights planned by tomorrow, after the union representing its pilots issued a 3-day strike notice. We've got more from our own Lindsay Biscaya. Lindsay, not great news for travelers.
Not great news for travelers at what is a busy time of year. So there's still potential that maybe a deal could be reached within the next couple of days. But yeah, this is the start. We're seeing Air Transit starting to wind down operations, halting flights completely either by tonight or tomorrow morning in anticipation of a strike potentially on Wednesday. And we're getting reactions today. TD Cowen analyst Tim James saying that investors should be prepared for a lot of volatility, short-term volatility. And we saw the share earlier today drop almost 3%. So we're already kind of seeing that. But yeah, this comes after 38 years. Okay, it's just under 2% at the moment. Earlier today, it was almost 3%. Almost 38 years of labor peace within the airline. So this is the first time we're really starting to see this disruption. The union representing about 700 to 750 pilots with Air Transat sending out that strike notice of potentially a strike coming on Wednesday. Customers who are traveling now obviously caught in the crosshairs of all this. Important to note, customers traveling within the next 5 days will be able to change or postpone their travel free of charge. Mm-hmm. But in the meantime, the airline obviously working to get all its staff, all its customers back home safely before something happens on Wednesday. And this also comes as the airline really dealing with some financial struggles over the years, accumulating some debt after COVID. Shares were down about 84% since 2020 within the midst of COVID. Obviously, all airlines were struggling. Air Transat working earlier this year to kind of recuperate some of that debt, but still having some financial troubles throughout the years. And now this on top of that as well.
And remind us what the pilots are asking for?
Yeah, so the pilots here, there's no specific details provided by the union representing these pilots, but we do know they're looking for better pay and better working conditions. They also want something that's in line with what Air Canada pilots received earlier this year. Of course, there was potential for a strike there as well. So we know within the latest offer that was put forward from the airline to the union, Air Transat offered pilots a pay raise of 59% over 5 years, as well as, quote, major improvements to working conditions. Not sure what that means exactly, but that was apparently what was in that deal. And it's interesting to note that Air Canada pilots settled on a bump of 42% over 4 years. So that's a 10% increase every year for Air Canada pilots over 4 years. This offer for Air Transat pilots would be just over 11% increase every year over 5 years. So interesting to see that the union not really biting at that point yet, not really taking that on. But again, both sides say that they're willing to get back to the table and negotiate before Wednesday.
Lindsay, thanks very much indeed.
Yeah.
Lindsay Biscaya. We got more on this when we sat down with Robert Kokonis, President and Managing Director at AirTrav.
Transat does indicate they are running a full slate of flights today, including some additional repatriation flights to bring people back. So the pull down of flights would start later tonight and all of tomorrow down to zero if that's where we go to.
So have you any handle on what the impasse here is? Is it pay? The pilots obviously say we want a similar deal to the Air Canada pilots.
Yeah, I mean, it always, with the pilots, it always comes down to the money. I think that the working conditions, other benefits, I think those are they're fairly close, if not already agreed. But it's money. And my fear is this, I mean, for ALPA and the pilots, they're almost coming to the big pilot contract bump a little bit late. We saw the U.S. carriers, we saw the big Air Canada settlement for 42% over 4 years. Right now, because my concern is that consumer sentiment has been waning. We know that air travel is always the leading edge of any economic slowdown, and I'm concerned with the numbers I'm seeing that the pilots are willing to not agree to a substantive bump up over the 5 years, as you've noted, is quite concerning. So we're talking about a 59% increase over 5 years. A lot of that in the first year, and I might note their last collective agreement expired in 2020, and the pilots had 3 bump ups totaling 19% over that space of time. So 78% over the span of, let's say, 10 years is a very significant number. So it would be very, very unfortunate if the travel plans of Canadians and others would be interrupted by labor strife.
How strong a player is Transat? Maybe we could put up a 5-year chart. Are they reasonably profitable?
Yeah, I mean, they've started to turn a profit this year. That's great. And if we remember back in January, the federal government stepped in to provide some relief for the large enterprise emergency funding facility that was put up in place during COVID. Transat never really ran any long-term debt before that, and they really struggled coming out of COVID with that. So the federal government helped us slice a few $100 million off that amount. So that's great, more stable balance sheet. And they have been putting in some profitable quarters this year, which is great, but I wouldn't say they're out of the woods yet. Systemically, Transat's in the middle of restructuring the company from a vertically integrated holiday company where you had a tour operator, travel agency, and the airline was only fulfilling seats to one that's evolving into more of a network carrier, separate from the holiday package business. But make no mistake about it, the holiday business is still a huge piece. They're flying to over 60 destinations. They have 39 airplanes in the air right now. And it was one thing, let's say back in the summer, Air Canada flight attendants went out. Terrible to see people's summer vacation plans ruined. But this time of the year is a pretty special time for a lot of travelers going to see family, for example. So I think this timing is bad. I would also note as well, too, the 72-hour required notice under our labor laws, I believe, for a large, complicated aviation player, whether it's Transat or even in Air Canada, of course, much bigger, 72 hours is just not enough time to ensure we safely get all the planes and crews back where they should be grounded, but also all the airlines want to make sure they make an effort to repatriate travelers before potential shutdown. Bottom line, though, I feel still optimistic. A negotiated settlement is always preferable to a strike, and I believe that the parties were talking last night and continue to talk today. So let's hope the cooler heads prevail on both sides.
Will other airlines? Just remind me. What is their relationship with Porter? Because they are teamed up with that carrier.
They are, and it's been fairly successful so far. It's a fairly broad code sharing relationship where the Transat code is placed on, or marketed, as we say, on Porter flights across North America, and Porter places their code on Transat operated flights internationally. And so it's a fairly broad relationship, and it really gave Transat what they were missing, which was a feeder structure within Canada and even from the US to feed those two big banks of international flights that Transat operates from both Toronto Pearson and Montreal Trudeau Airport.
Just a reminder, Transat is a lot smaller, obviously, than a player like Air Canada.
They are. I mean, as I said, I mean, the impacts of a flight attendant strike this past summer there in Canada, quite significant. And Transat, with a mainline operation of maybe 220, 225 airplanes flying everywhere around the world, that was Air Canada. In Transat's case, much smaller, 43 airplanes, of which 39 are in service. And they're flying to a lot of destinations across the Caribbean, Mexico, even into South America. They've got a flight between Montreal and Lima, Peru. They're starting flights this December, I believe, to Georgetown, Guyana. They fly across Europe and points in North Africa. Now, some of those are seasonal, but they're still flying to 60 plus destinations on their own outside of the Porter relationship. Of the 60, maybe 15 aren't being flown right now that are seasonal summer, but it's still enough, and enough with maybe 10,000 some odd passengers per day. And let's say there was a shutdown for 3 days or who knows how long, that's a pretty significant impact, not to mention the number of people who would be impacted on the lead up to a work stoppage and then a recovery.
Robert Kokonis there, Managing Director at Airtraf. Coming up, we're going to hear from a long-time player in Canada's entertainment industry on what Netflix's proposed purchase of Warner Brothers would mean for Canada's media landscape. So Paramount has come in with a hostile bid worth more than $108 billion for Warner Brothers Discovery. And this plans that announcement of Netflix's planned purchase of Warner Brothers last week. In fact, Netflix would just buy the streaming and movie studio business and spin off the network business. What does this mean for Canada's entertainment landscape? We're joined by Doug Barrett, adjunct professor of arts, media and entertainment at the Schulich School of Business, a longtime player in Canadian media, also a former chair of the Canadian Television Fund, which is the main federal instrument for supporting the TV industry. Thanks very much indeed for joining us, Doug.
Hi, Andrew.
I guess one thing that leaps to mind here is what happened. Warner owns Crave, and what happens to Crave if, Warner owns HBO, and then our parent, Bell, through Bell Media, owns Crave, and that has the HBO franchise in Canada. So the question would be, what does this mean for HBO in Canada if Netflix gets to buy Warner?
Well, it could mean a lot. Bell's issued an announcement saying Crave is still part of the Bell family, and HBO is part of the Crave package. Bell has had a very good relationship with Warner Brothers Discovery for quite a long time, and the Canadians are used to seeing HBO and HBO Max as part of the Crave package. And I gather in 2024, we don't know the details, but Bell signed a multi-year agreement with, or Crave signed a multi-year agreement with Warner Brothers Discovery to continue with the HBO programming and so on to the Canadian audiences. I guess the question is, what will happen if when that deal expires? What will happen to HBO as part of Crave? Now, David Zaslav, who's the head of Warner Brothers Discovery, had an all staff meeting last week, and he said HBO is going to continue as a standalone service. It's not going to be folded into Netflix. Now, that's the outgoing head of Warner Brothers Discovery talking about what the plans are, but who knows what the actual plans will be when the deal is consummated, if Netflix gets it, notwithstanding this new bid. And I think it's anybody's guess as to what will happen, but certainly if at some point in the future Netflix was to want to absorb the HBO programming libraries into its main service, it would be a pretty serious blow for Crave. But I don't think there's anything likely to happen immediately, certainly for the next few years.
I'm checking with my colleagues at Bell Media, but apparently Crave has reportedly about 4.3 million subscribers, and Netflix has something like 9 million Canadian subscriptions. So we're talking about a lot of people here. It is interesting. What do you think of this argument that Netflix is apparently coming up with? Oh, well, we compete with YouTube, but I think some people are mocking that, saying, well, it's mostly just brain rot on YouTube. We're not talking about high quality productions.
Well, YouTube is a fundamentally different service. It is an incredibly successful service globally, but it is a different type of entertainment experience for sure. And it is not at any point yet successfully gotten into premium entertainment of anything like the nature of what Netflix offers or HBO offers. So, but the Netflix deal is, now that it's being threatened by a bid from Paramount Skydance, have I got the name right?
Yes. Paramount Skydance.
Paramount
they keep
Skydance.
changing. Yeah. Go ahead.
Yeah. Both bidders have a major streamer. So the only thing is that in the Netflix bid, some of the cable channels are being spun off, CNN and so on. And in the Paramount Skydance bid, it's a bid for the whole bundle of channels. Right. There's to be no spin-off.
I mean, of course, oligopsony is one of my favorite, oligopsony is just very few buyers in the market. And of course, if we did get HBO and Netflix under the same owner, it'd be tough for producers of content. There'd be fewer buyers, purchasers of their stuff. And that would apply, of course, to Canadian creatives as well.
Absolutely. Well, both possible transactions represent a dramatic consolidation. Scott Galloway, I'm sure you've heard of him. His little headline is "Netflix just bought Hollywood." It's a pretty dramatic statement, but the consolidation never seems to end. Each of the components of both of these packages of that the companies have, originally were powerhouses in their own right. CNN was its own powerhouse. Warner Brothers was a powerful studio. Discovery, a hugely successful specialty channel. So they keep bundling up and then reducing the number of buyers for potential content. For Canadians, Hollywood has always been a big hill to climb, and this just reducing the number of buyers is going to make it an even bigger hill to climb.
Yeah, Galloway, of course, marketing prof at New York University, among other things, but a well-known pundit and always an interesting commentator on affairs. We've very little time. The government backed down on the digital services tax. Could you generalize? Is Netflix putting back as much right now into Canada as it takes out in membership fees?
Well, it thinks it is, but what it's really doing is creating, having its own projects being shot in Canada. And if they have a small Canadian element, then Netflix says, well, that's a Canadian show. And if we ever are obligated to contribute to the system in some way, the kind of stuff we do with a few little Canadian elements should be treated as fully Canadian. There are a lot of folks, including myself, who dramatically disagree with that. The Canadian government's been working for 50 years to develop a system in Canada that supports Canadian programs and supports making the stories that Canadians want to see, and that's becoming progressively more under threat.
Doug, thank you very much. I hope you'll come back, but you have such depth on this subject, and we'd love to have you back if you're free as this story develops. Thank you very much.
It'd be my pleasure, and thank you, Andy, for inviting me.
Doug Barrett, adjunct professor of arts, media, and entertainment at Schulich School of Business. When we come back, a new play based on the Ted Rogers family empire and their feud is running at the Crows Theatre in Toronto. We heard from the playwright, Michael Healy. A new play about the Rogers family empire has landed at Crows Theatre in Toronto. It's based on a book by Alexandra Posadsky. Rogers versus Rogers explores the family dynamics that played out after the death of the communications czar Ted Rogers during the huge acquisition of Shaw Communications. We heard from Michael Healy, who was the playwright.
The Rogers family has such a curated public face mostly, and this was an opportunity to see their family dynamics happening in public, through Martha's Twitter feed and also eventually through, court filings. So this was a real opportunity to look at the folks that are kind of running our lives to some extent in a kind of unguarded way.
So it's Paul Harris here. So has the Rogers family come and seen the play, or have they spoken to you about it?
We've had a few previews. We're opening on Wednesday night. Nobody from the Rogers family has come yet. Everybody's welcome to buy a ticket and come see the show. But honestly, if you're interested in the facts, you want to read Alexandra's book. Because I'm creating a piece of art that's based on her facts, and I'm kind of after larger questions here, questions about competition policy in the country and things like that. So I think if you come looking just for a documentary, as somebody from the Rogers family they might be a little frustrated.
And what are your concerns? You're talking about competition policy. When you read the book and now you're putting this play together, what were some of the concerns you tried to address?
So I wanted to look at, the dynamics of the Rogers family, really just a vehicle for me to examine the Rogers-Shaw merger and use that as a kind of vehicle to discuss corporate concentration in the country, these oligopolies that seem to run things in telecom, on the airline side, and in grocery as well. And so the questions that I want to look at are, what are the barriers to entry for new telecom companies in this country? Why is your cell phone bill so high? Why is customer service so frustrating across all of the incumbents? All of the things that we kind of privately are curious about or angry about, and rarely get to discuss in public.
So you did another play called Master Plan, I guess, which dealt with the Alphabet Group. Is this where you feel this kind of mixture between art and business and putting those things together? Is that something that's been a part of your life, or why does this so interest you so much?
Well, I think in both cases, there are public servants kind of at the center of these stories who are attempting to do hard things and getting kind of frustrated. And that frustration being thwarted makes for great comedy. It makes for great drama. In the case of the Master Plan, we've got people at Waterfront Toronto who are trying to do a hard thing, on the waterfront in terms of building sustainable housing. And in this case, we've got Matthew Boswell, the Competition Commissioner of Canada, who is bound and determined to stop the merger of Rogers and Shaw, even though the Competition Commission has never been able to fully block the merger of two companies in history. So he's attempting to do a hard thing here. It drives him nearly crazy that he's unable to do it, and that makes for good entertainment.
And you do look at the business side, and that's a big focus for you. But do you get into the people as well who are involved in this? And what's it like this is a one-man show, what's it like just having one person play the different personalities?
Well, the interesting thing about this story that I realized, pardon me, pretty early on, is that Edward Rogers is attempting to do something kind of way outside his comfort zone, which is take over his father's company. And Matthew Boswell is attempting to do this thing that's also very hard, which is to block this merger. And so here are two guys who are kind of operating way out over their skis, trying to do a hard thing, one in his own self-interest and one in the public interest. And the parallel between their two dilemmas made me realize that if they were embodied in one actor, then we could have something, a kind of fun energy, a kind of fun dynamic created on stage.
Matthew Boswell, of course, was he fought it. He headed up the Competition Bureau. And ultimately, the Competition Bureau was ordered to pay $13 million to Rogers and Shaw over the long battle that Boswell fought. He allegedly took an unreasonable approach to doing his job. Anyway, Transcontinental has sold its packaging business in a deal valued at more than $2 billion. We hear from the executive chair of the board next. We're watching shares here in Transat. That carrier stock down about 2% right now, but up almost 30% in the past year. The airline plans to begin cancelling flights today and tomorrow after the union, representing more than 700 of its pilots, issued a 3-day strike notice. And that strike could begin as early as Wednesday. Transat says gradual suspension of operations is to prevent passengers, crews and aircraft from being stranded abroad. And we're watching shares in Warner Brothers Discovery, Paramount Skydance and Netflix today after a new development. Paramount is now offering to buy the film and TV giant for $30 US a share and has taken that bid directly to Warner shareholders. The move comes days after Warner agreed to a deal with the streaming giant Netflix. Paramount says its offer provides shareholders with $18 billion US more than Netflix's plan. Its offer, however, is for the entirety of Warner Brothers, including its global networks. Canada's trade surplus for the year has topped $1 trillion for the first time. According to Chinese customs data, goods leaving the country climbed in November after a decline the month before. For the year, China saw exports surge to destinations including Southeast Asia, Latin America, Africa, and the European Union. Meanwhile, shipments to the US dropped nearly 29% year over year. And there is a look at the TSX. It is edging down today, still shy of Thursday's record high close. And let's have a look at the US markets. You can see they too are down. That's the usual suspects, of course, are the high value traders right now on Wall Street. Nvidia topping the list. That stock up almost $5. Tesla's under pressure. It's down about $16. Broadcom, though, the chip giant, advancing. It's up about $12. Apparently, Microsoft, we're hearing, according to Investors Business Daily, Microsoft is in talks to move to Broadcom to design future custom chips. That could be bad for Marvell technology. However, that report is getting disputed by some sources. Oh, what did I should have said China's trade surplus. Thank you. Okay. An American outfit called Pro-Ampac has announced today that it's going to acquire the packaging business of Transcontinental in a deal valued at $2.2 billion. We're joined by the executive chair of the board at TC Transcontinental, Isabelle Marcoux. Thank you very much indeed for joining us.
Hey, Andrew, thank you. Thank you for having me.
So we were looking at this morning. We thought Transcontinental, well, they're all about packaging, aren't they? So it is. We'll talk about the rest of the business now. But right now, packaging is most of your revenue. It's almost 60% of your revenue, I believe.
Yeah, a little shy of 60%. Absolutely. And today we're announcing the sale of those U.S. assets to U.S. purchasers. We're thrilled. This transaction delivers immediate and significant value to our shareholders at a substantial premium. Our stock used to trade before today at $20. We're looking at a transaction that will deliver $20 to our shareholders in dividend, and they will remain shareholders of TC Transcontinental, which is the other half of our business.
Mm-hmm. And yeah, so you're paying this $20 a share dividend. I think the amount, you haven't calculated it exactly yet, but it's about $20 a share.
Exactly, that's what it is. So it represent quite a substantial premium. We trade at 5.5 times EBITDA, and we're selling this business at a 9 times multiple, hence the premium that I've been referring to.
Right. So now, packaging in your latest quarter was almost almost $400 million. And then this other business, retail services and printing, was about 260 million, so smaller. But I noticed its profitability was almost as much as packaging, that latter business.
Correct. So our $1.2 billion retail services, print, and educational publishing business is a profitable business. It's a fully invested platform. It generates incredible cash flows. And with this transaction, we will be repaying debt. We will be issuing a dividend, and we will be left with a strong balance sheet that will poise us for further growth in Canada in those sectors of retail services and educational book publishing.
Oh, that's interesting. What kind of books? Are they textbooks that you publish?
So what we do is educational book publishing. So K-12, college, university, both print and digital, in French language. So we have built this business over the last 15 years from one acquisition to many others, and now it's a $110 million business, and it's a business that we want to continue growing.
Is that
on the print?
Sorry, go ahead.
On the retail services and print side, we've grown our ISM business, in-store marketing business, to just about nothing, to 300 million right now. In the past 3 years, we've made acquisitions in Quebec, in Ontario, in Manitoba, and that's a business we also wish to continue growing.
Sorry, I interrupted you there. The educational publishing, is that in France as well, mainland France, or mainland France, or is it just in Quebec?
It's in Quebec mostly, but it's also in Canada, where French is taught as a second language.
Right. And then tell us about this retail business. What exactly does it do? Is it digital, or does it involve physical media?
So it's both. It's a simple description of in-store marketing is print and digital signage and temporary and permanent displays. So with our flyers, we bring people in stores. And as the retailers continue to invest in their brick and mortar, we dress up the store, so to speak. So in any given week, we ship at least one item to 30,000 retail stores in Canada. We see that as a growth area.
Flyers, that's interesting. That's a tough one, isn't it? I've heard in the past it's a battle of wits between the retailers and the shoppers. They want to offer good deals, but they can't give too much away, and the shoppers are pretty canny.
And the reality with inflation, shoppers are looking for discounts and retailers are looking to bring people in their stores. So flyers is still a great medium. We've transformed the flyers place certainly in Quebec and British Columbia with a new product that's called Radar. And in the rest of Canada, we distribute flyers.
So it's interesting, you're kind of going, but you started off as commercial printers. So you're only a very specialized printer now, but you made the trip into packaging and you're kind of returning to your roots here.
The reality is quite the contrary. The print company we were 10 years ago is quite different than the retail services and printing company we are today. It's evolved, this in-store marketing business. And the reality, in the past 3 years, the acquisitions we've done were in that sector. They were not in packaging. Nice. The issue with packaging is very simple. We trade at 5.5. Acquisitions come at 9 times at least. So it's very hard to create value for our shareholders growing into packaging. We have invested heavily in packaging for organic growth, but the reality, there's limited volume growth and the pricing pressures are really hard. So for us, the best way to create value for our shareholders was to sell that business at a large premium. So what we're selling is really our U.S. assets to a U.S. purchaser, and we're excited to embark into this sharp focus we have on advancing retail services and educational publishing in Canada. We're really doubling down on Canada. We're a Canadian company headquartered in Montreal, 4,000 employees in Canada, and we remain committed and focused to grow those businesses here.
Isabelle, thank you very much for joining us today. Isabelle Marcoux, Executive Chair of the Board at Transcontinental. Coming up, a new report is coming into question, calling into question the Carney government's plan to double the pace of housing construction in this country. It's after the break. A new report questions the Carney government's plan to double housing construction in this country. CTV's Annie Bergeron-Oliver filed this report.
We need to get housing supply up. In fact, we need to double housing supply on an annual basis.
Prime Minister Mark Carney's campaign pledge to build nearly 500,000 homes annually so far isn't adding up. According to a new PBO report, Ottawa's new federal agency, Build Canada Homes, is projected to add 26,000 units to the housing supply over the next 5 years, a 2.1% increase over the fiscal watchdog's baseline projection for new home construction.
I think I would give them a C- when it comes to housing. That overall, I think they are moving in the right direction, but not at the speed and scale that's necessary.
The housing minister doesn't see things the same way. He says Build Canada Homes is just getting started and that the PBO's numbers don't tell the whole story.
I think that's just based on the raw number. It's not based on attracting a lot of investment from provinces, from the private sector.
By harnessing private and public sector funding, Ottawa intends to double the pace of housing construction. But so far, it hasn't released a clear plan to achieve that goal. And overall spending on housing, according to the PBO, is set to drop by 56% over the next 3 years as Trudeau-era programs expire.
A lot of the mechanisms that the federal government used weren't terribly effective in creating the affordable housing that people need the most. So I welcome the restart represented by Build Canada Homes, but we have to see a lot more.
The PBO report assumes that major programs like the $4.4 billion Housing Accelerator Fund will not be renewed or topped up. The finance minister, however, says it's not fair to prejudge what decisions the government will make between now and 2029. Annie Bergeron-Oliver, CTV News, Ottawa.
Still ahead, shares in 2 companies developing obesity drugs, Structure Therapeutics and Wave Alliance. Both are surging today. We'll hear why from a Bloomberg reporter in Berlin. That's coming up. Pharmaceutical industry has just been set on fire over the past few years by these anti-obesity drugs. And now we have a new investor favorite, Structure Therapeutics. Its stock has jumped today, hitting a record. We're joined by Bloomberg Equities reporter Avalon Purnell in Berlin. Thanks very much indeed for joining us. Tell us about Structure. I think they're working on a pill form of an anti-obesity drug.
You're correct. Thanks so much for having me as well. Structure Therapeutics, as you said, is up as much as 175% today. That's a record high this afternoon after reporting in its mid-stage study that patients lost about 11% of their body weight on a lower dosage of the pill. Now, for those who were taking a higher dosage of that pill, patients saw even more weight loss, topping out at around 15% in a separate study. But it is important to note that about 10% of patients dropped out due to side effects like nausea and GI issues. That's a similar discontinuation rate for competitor like Eli Lilly's oral pill. Still, analysts say that the results are practically a home run scenario for the drug.
Because as far as I know, an actual pill as opposed to an injection is the holy grail here for the pharma industry with these obesity treatments.
Yes, you are completely right. Both Eli Lilly and Novo Nordisk are working to get FDA approval for both of their oral weight loss drugs. And to say the least, patients are even waiting on the sidelines a tiny bit just to see if they can skip out on the shot and still get weight loss in the future once the pill officially comes out. So these results make Structure a potentially great M&A target for big pharma companies looking to potentially hop over the competition with Eli Lilly and Novo Nordisk that are already waiting for those potential things to come through from the FDA and potential approvals.
And then we're also getting a lot of interest in a company called Wave Life Sciences. Now, I think their obesity treatment is injected, but there's still great excitement about it.
Yes, Wave Life Sciences is up about 151%. Again, That's most on record today after the biotech reported positive results from an early stage trial of its experimental obesity drug. Now, it's important to recognize that this is not a GLP-1, so it is injected, but it doesn't have the same sort of issues like those nausea and GI issues that are reported with other drugs, which is potentially another reason why people are really excited about it. Patients taking the drug saw about a 5% reduction in total body fat and a 3% increase in lean mass, which is really important because a key concern among patients taking those GLP-1s is loss of muscle. So potentially the data is showing that the patients who are taking Wave Life Sciences experimental drug are able to maintain some of that muscle, which is a pretty nice effect, to say the least.
Before I let you go, Avalon, I hope you don't mind. I visited Berlin many years ago, 1984, actually. But I think you're from the States. I just got to ask you, how do you find Berlin? Is it a fun city?
I love Berlin. I used to live here myself as well. So even though it's a little bit gray and dark outside right now, it's always a fun place to be. We have some Christmas markets already open, so I'm excited.
Thanks. I remember being in at least one bar back in 1984 that never closed. It never closed. Anyway, thanks very much indeed for joining us today.
Thanks for having me.
Avalon Purnell. I think we've time for a quick look at the markets. Okay, well, let's call up the TSX because we got some stocks of interest for you here. There is the TSX, and you can see it is lower in early trading. We've got obviously what's thought of as a foregone conclusion, the Fed cuts on Wednesday, but that's well baked into the markets. And a reminder, analysts and economists don't think the Bank of Canada will give us yet another interest rate cut. Few stocks of interest here. Speaking of special dividends, we already talked through Transcontinental. Maple Leaf Foods is declaring its own. There's Transcontinental, thanks. They, of course, plan a special dividend of $20. There's Maple Leaf Foods. That stock up around 4%. That company announcing a special cash dividend of 60 cents. It'll cost them about $75 million. It's payable if you own the stock December 15th. You have to own it December 15th to be a shareholder of record. National Bank saying, well, they weren't expecting this, but it doesn't have a huge impact on the balance sheet. Maple Leaf Foods, of course, just spun off its Canada Packers business as a listing on the TSX. Couple of stocks out of favor with investors right now. Boralex, BLX, falling to its lowest in at least a year. The company's latest results were hurt by unfavorable wind or unfavorable weather, and I think it's nearly all wind conditions. And I think that's been a continuation of a trend. And let's have a look at Thomson Reuters, a classic blue chip stock. Of course, a big part of the Thompson family's wealth, but that stock hitting its lowest in at least a year. Could well be concerns over data and software stocks as AI spreads everywhere. Okay, thanks very much for watching our show.